Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FXpressor. So, as you all know, today is Thursday. We just had one of the best CPI releases in a while. So, yesterday was quite instrumental in determining the market direction. And these basically led to some major breakouts happening, especially in gold. So, as you can see what happened on Wednesday, early in the morning, the Reserve Bank of New Zealand basically decided to hold interest rates level at 5.5%. And of course, the most important data point was the US inflation data, or basically the CPI, which came in at a 0.2% growth in June versus unexpected 0.3%. The consumer price index year over year slowed down to 3.0%, which was way below the expected 3.1%, and of course the previous reading of 4%. So remember, the interest rate target for the Fed is 2%. So now it's only 1% to go until the Fed reaches its target. And this basically implies that the Fed may not continue hiking interest rates further. So core CPI also slowed down to 0.2% from an expected 0.3 and a previous reading of 0.4%. So later on, we saw the Bank of Canada go for an interest rate hike of 25 basis points, which basically pushed Canadian interest rates to 5%. So that being quite a volatile day, today we have started with quite a number of news. Among the most important ones, including the 9 a.m. GDP report from the UK, which showed that the UK economy contracted by 0.1% in the month of June. So with that being said, now we look at the expectation for the day. So we don't have much that we're expecting for the day, except the US core PPI. This is a measure of what prices, or basically the producer price index. So it basically measures the change in the price of finished goods and services sold by producers in the US. So this also is expected to improve rather than slow down. So in the previous reading, it was down negative 0.3%. In this case, we expect these prices to increase by 0.2%. So it will also be a very strong measure to show how prices may progress in the US over the next 1 month. So that's the only news that we'll be expecting for the day. So a very strong PPI would basically mean that the Fed has to do more and would be positive for the dollar. But then if it comes slower than expected, then it basically means that the Fed doesn't have to do much with interest rates, which basically implies a much weaker dollar. So now that you understand all that, the next part is basically by focusing on the charts, try to understand where they are moving and hopefully identify some trading opportunities. So as we continue, if you have any questions, feel free to type them in the live comment section and I will be responding to them right away. So hello, Kevin. Hello, Lemuel, Ambrose, Bandy, Kevin. I can see Olatunji is in the house. Good morning. Hello, Kevin. Thank you guys for joining the session. So let's continue. So first things first, we had a very beautiful inverted head and shoulder happening on the 4-hour chart in gold. And then immediately after the announcement of the news, we had a very nice break upwards and the market has continued in that direction since then. And it's almost hitting our target of 1973. So in this case, whenever you have such a breakout after an inverted head and shoulder, it's normal to expect the market to make a very strong directional move. And in this case, we can see that there was a lot of resistance around this area. So the target is based on this previous consolidation zone where the market was unable to break. So the market is headed straight for that level around 1973. And there's a good chance we'll be seeing this upside continue to happen in gold for the day, for the rest of the day. So the dollar index, on the other hand, has been pumping downwards. So last week it was quite bearish, and this week it has really continued in the same momentum. And with this bearish momentum, it's as a result of the CPI news, which basically shows that the Fed doesn't need to continue hiking interest rates. So with this in mind, when you look at other pairs, you can see that the dollar has really weakened. So one of the favorite assets that investors are going for is pound USD, mainly because the inflation is still relatively high in the UK. So this means that the Bank of England may have to go for a stronger rate hike in order to get inflation back to the 2% target. So currently, the inflation rate in the UK is above 8%. So with that much high inflation, it means that the Bank of England has to do more, which means there's a projection that interest rates in the UK could go as high as 6%. So while on one side, the Fed may not continue hiking interest rates because they are almost reaching their targets, the Bank of England may have to continue hiking interest rates, which creates a very huge policy divergence. And this basically means that the pound USD will only be moving in one direction, and in this case, it's up. So investors already know this, and you can see for the last couple of days, you can count these as the 6th day, where the pound has been consistently rising against the dollar, and it's been quite a period since we saw such a strong acceleration happening. So in this case, it basically means any form of pullback on this chart will be identified as a strong opportunity to go for a bullish position in a pound USD. So this one is expected to be unidirectional for the day. So for any trader that is looking to trade these, there's a good chance we'll continue to see some more upside happening in this chart. So additionally, from a technical perspective, you can see from the daily chart, we had a trend line that was happening along this area. And that trend line has held for a whole year since June last year. So this basically means that we have a breakout within our hands, and it basically implies more momentum for this chart. And there's a good chance we'll be seeing some more upside happening in pound USD. So any form of pullback on a shorter time frame will be taken as positive. So we continue trading higher. And of course, the Euro USD is also very bullish. So as long as the dollar keeps on weakening and these guys are continuing to to hike or tighten policy, then this will be expected, a very strong momentum upwards. So in this case, any form of pullback is being taken as very positive for the Euro USD. So for USD CAD, it's a similar thing. You can see the market is going back downwards, and of course, it's almost testing the previous low. For USD JPY, it seems that we have broken this trend line, so there's no bounce. So the expectation was that if inflation is stronger than expected, then the market would eventually bounce from this area. So this idea has now been nullified now that you have a breakout towards the lower side. And now it's time to start looking for short selling position in this one, as the market continues pricing the potential that the Fed may have reached the top of its rate hikes. So for Audi USD, a very strong break outside this pattern happened yesterday. Continuation upward, and you can see from this morning we are seeing some very strong momentum, and of course the new target is the previous high around 0.68985. So there's still a good chance we'll be seeing some further upside happening in Audi USD currency pair, whereas for the US equity indices, they've managed to rally out of their consolidations here. So we almost had a double top pattern completed here, but the market did not get to the trend neckline. And now what we are seeing here is something that is completely different. So if I was to remove all these, then you'd notice that the prevailing chart pattern here is now somehow different or somewhat different. So there's a lot of greed in the market, basically implying that people are very positive that this is the end of the bear market when the Fed stops hiking interest rates. And this led to the breakout that we happened to see yesterday. So now this is what we are working with, a market that was trading inside this particular triangle. And now we have a breakout to the upper side, which basically implies there's a good chance we'll be seeing some further continuation higher. So this is the NASDAQ on the 4-hour chart. On the 1-hour chart, this is how it looks like. So there's still some chance we'll be seeing some further upside, having broken out of this high here. So now the market may be going for this other high, which is an all-time high. So the all-time high for the NASDAQ was around this area here. And of course, the high that we are just breaking is right here. So in this case, when you zoom out, when you zoom in, you can see the level right here was being tested several times, and the market has eventually broken that level, and there's a good chance we'll be seeing some further upside. Same case happens with the S&P 500. So we didn't quite complete the pattern, which was a double top formation. And now we are seeing the market breach the upper side. So there's a good chance we'll be seeing some further upside. And of course, the Dow, which was the weakest, has now retested this area here, and there's a good chance it will be going for a break. So as for oil, we have been watching this. So after the market broke this particular trend line, there was a nice retest and then a very strong rally. So our target has always been $80 since we tested this area here and the market broke to the upper side. So right now you can see that the market has already hit the $80 price level. And now the idea is to observe the price action to see if there's a rejection or an acceleration of this price level. So at some point, I may be expecting some form of pullback. Clearly, after the market hit the $80 price level, you can see the candlesticks got smaller and smaller, and there is less optimism that the market may continue higher than that. So there is a good chance we'll be seeing the market pulling back from this area here. And you can already see the consolidation happening here. So this is a 15-minute chart on Brent oil. And if the market breaks to the lower side, then there will be a good chance to go for a short selling position. And of course, if there's a further break, then you could even trade higher. But for now, I think the market will be pulling back, but I'm not sure. There's a likelihood we'll be seeing the market go back to around $78.5 per barrel. So as we continue, I'm checking to see if there's any question. If unemployment claim will read from 248K to 251K, will this indicate a weaker dollar and gold to rally to 1973? I think the big highlight for today is not the unemployment data, but rather the producer price index. So the PPI here is the key determinant of volatility during the New York session. So this is the news we're expecting for the day. Industrial production in the Eurozone, Eurogroup meetings. Of course, there is the ECB monetary policy meeting accounts, which is basically the meeting minutes. Core producer price index and producer price index are the biggest players compared to the unemployment claims. So the difference is that the unemployment claims are a weekly data point, so they don't have as much impact in the markets as compared to the NFPs that we saw last week. So in this case, you can see that the claims are at around 251K, but the official job market data already indicated that the job market in the US is softening, basically meaning that unemployment is rising and the excessive demand for labor and wage growth has really slowed down. So in this case, if the unemployment claims are rising, it would mean that the Fed is achieving its goals, which would continue to weaken the dollar further. But then if unemployment claims are dropping, it would basically mean that the job market is strengthening, and that would be quite positive for the dollar. So hopefully I've answered your question. So last question here seems to be coming from Job. Thank you for the question. Check on Euro GBP. So just a moment to load the chart. Yeah, here it is. So Euro Pound is basically moving on a bearish momentum. So in the last couple of movements, you can see that the Euro has been pretty strong, but today you can see the pound being really strong against other pairs, especially including the dollar. So what we are seeing here is a market that is facing a strong resistance point here. And then after hitting this resistance, there is a very strong rejection and an acceleration downwards. So there is a good chance we could be seeing a continuation of this momentum, perhaps at least towards this area here, around 0.85249. So yes, thank you for the comment. There's a good chance this will play out well intraday. So the question on USD CAD, the Bank of Canada is still raising interest rates. There's a lot of speculation that the US may not continue hiking interest rates. So in this case, there's a good chance we'll be seeing a much weaker dollar and a strong Canadian dollar. So in this case, we are seeing the market going to retest at the bottom here. So the most recent low is what we are retesting. So there is a good chance that this is playing out as expected. So I just want to remove all this noise so you can grab an idea of what we have been analyzing in USD CAD. So on a really long time frame, which is the daily time frame, what we are seeing in this chart is a market that was literally moving sideways. And this is since the month of August last year. So the overall direction of USD CAD was just a sideways moving engine. So we didn't have a lot of opportunities here. But then once the market broke outside this area in May, then we've had some good volatility where the market was moving downwards. Then for 2 weeks, kept going back up to test the area. And once it got here, we can see the acceleration downwards. And this week has been straight out bearish for the Canadian dollar. For the USD CAD currency pair. So for any intraday trader, we know that the market is going for this swing and it's looking to retest this area here, which was acting as the support for this chart, 1.31184. So in this case, from the 1 hour chart, it shows there is still some more pips to be gained if we continue trading this way. So once the market gets to this point, there's no telling whether the market will bounce or if it will break. So it's basically a matter of wait and see. So in USD JPY, will there be a pullback? Obviously, the market doesn't move in a straight line. There will always be pullbacks to be found. So in this case, for USD JPY, if there's a pullback, then we basically continue trading. So in this case, I don't think we are waiting for any other pullback. This is the pullback. So in this case, we know that the chart is completely bearish. So this is the pullback we are waiting for. So there is a good chance we will be seeing some further downside happening in this chart. So the idea is, as we already mentioned, the market made a very strong directional movement, broke this trend line, went for a retest quickly, and is now continuing to drop further downwards. So in this case, what we are seeing here is a very strong directional movement. This is 5 straight days where the market has been selling, and now we are approaching a key level. The key level, of course, is the previous highs here. You can see these 2 instances. So these tend to be quite important for the charts. This area here, and of course this area here. So now, as the market goes down, we know that we expect some level of support around 137.645. So in this case, we expect the momentum to continue, and we get out at 137.645, waiting to see what the market does once it gets here. So there is still some good chance we'll be seeing some further downside happening in USD JPY pair. So good question from Oseve. Hello, after the news yesterday, price broke through the resistance levels and the sequence. What would you recommend? I wait until price forms another sequence before taking my trades again. The idea is, even if we do all these analyses, we try to identify key price patterns and price levels. So in this case, if your trading approach follows a certain plan, you wait for something to happen, you have a predefined set of rules that you wait for before you enter the markets, then you should absolutely do the same. Wait for the same set of rules before making a market entry. So in this case, even if there's acceleration and high momentum in the markets, it doesn't mean that you go for higher risk or go hunting for trades that are not according to your trading strategy. So make sure that you follow your strategy dutifully. So DXY bottom in the short term, I don't think it's a bottom yet. There's still some more confluence to be found. So USD CNH in the head and shoulder is the head and shoulders complete. So we'll be checking that too. I wonder where you are seeing the head and shoulders. Somehow I can't see that. I don't see any formation that is anywhere close to head and shoulder. So what you are seeing here is basically just the dollar losing the Chinese yuan, and there's still some more room for downside, perhaps towards 7.13585. So that's it for the day. Thank you very much, guys, and I hope to see you guys on the next session. So I think Jeff, you joined late. For gold, we already did the analysis. Kindly review the session. It's available on YouTube. And of course, we'll be having another session today at 8 p.m. So for gold, the current target is 1973.